4th, 2024 at 10 a.m. Key points. Carnival has been fielding record demand, and that's already continuing into 2026. Meanwhile, lower interest rates are helping the cruise line pay off its debt more easily. While some risk remains, Carnival stock is attractively priced at current levels. 10 stocks we like better than Carnival Corp. NYSE UK, Carnival Corp, stock quote, market cap $3 billion. Today's change 2.07%, up $0.49. Current price $24.20. Price as of December 4th, 2024, 12:06 p.m. ET. With less than a month left in the year, the S&P 500 is up 26%. Interest rates are being cut, and Donald Trump is getting ready to return to the Oval Office. Although the stock market is looking a bit bloated, there's a feeling of buoyancy with strong market indicators. That could fuel further gains in 2025, but it could also lead to a correction at some point. Either way, Carnival, ticker symbol CCL, up 2.22%, and CUK, up 2.07%, is poised to rise in the new year and the long term. Here are 3 reasons why. Reason 1. Demand is soaring. Carnival continues to field unprecedented and unrelenting demand for its products. Revenue has surpassed pre-pandemic levels and is still climbing, and all the signs indicate that it will keep it up for the foreseeable future. In the 2024 fiscal third quarter, ended August 31st, revenue increased 14% year-over-year to $7.9 billion, which was already a record last year. It's entering 2025 in its best-ever booked position, with less remaining inventory than last year, and it's even booked out into 2026 with its best-ever rates. Because of the low inventory, it's also booking out at high ticket prices. It's ordering new ships and changing routes to meet demand where it's strongest. Scale is helping Carnival return to profitability. It hasn't fully gotten there yet, but it reported positive net income of $1.7 billion in Q3. Operating income was $2.2 billion, up $554 million from last year. It raised guidance for adjusted earnings before interest, taxes, depreciation and amortization, or EBITDA, and return on invested capital for the full year. Increasing adjusted EBITDA is driving increasing operating cash and free cash flow, and Carnival is getting into a better financial position. Reason 2. Lower interest rates will help with the debt, and more. Carnival stock has been on the rise since the Federal Reserve announced that it's cutting interest rates. This helps Carnival in 2 ways. One is that lower interest rates boost the economy, since people and businesses can borrow money more easily. People who have been putting their dream cruise on hold are more likely to splurge in a more active, lower interest rate economy. Carnival is more likely to keep up its strong demand in the looser economy. Are you missing the morning scoop? Start your day ahead of the game with the market's top stories and key investing insights. Breakfast News delivers it all in a quick, foolish, and free daily newsletter that lands in your inbox every market morning. Enter your email address. Enter email. By submitting your email address, you consent to us keeping you informed about updates to our website and about other products and services that we think might interest you. Please read our privacy statement and terms and conditions. NYSE CUK, Carnival Corp. Today's change, 2.07%, up $0.49. Current price, $24.20. YTD, 1 week, 1 month, 3 months, 6 months, 1 year, 5 years. Price vs S&P CUK. Key data points, market cap, $3 billion. Days range, $23.83 to $24.29. 52-week range, $12.50 to $24.29. Volume 492,849. AVG Vol 1,809,269. Gross margin 26.77%. Dividend yield NA. What's even more on investors' minds, though, is Carnival's high debt. It ballooned when Carnival had no money coming in and needed funds to keep going. Carnival has been in a precarious position since then, even though its business has rebounded and revenue is reaching record levels. It has been paying debt off steadily, reducing it through prepayments, restructuring, and getting rid of the highest interest notes. The fear has been that demand will slow before Carnival can reduce the debt to a manageable level. But as revenue soars and the company generates more cash, it looks more likely that it will be able to get it down to a reasonable level. Now, with lower interest rates, investors are feeling more comfortable with Carnival's ability to pay off the debt in an acceptable time frame. Reason 3. It will be able to carry a higher valuation. Carnival stock trades at a price-to-sales ratio of 1.3 and a forward one-year price-to-earnings ratio of 15. That's an objectively cheap valuation, but valuations are never objective. With its high debt and unreliable earnings, Carnival stock doesn't earn a premium. However, the story keeps getting better. The stock will be able to justify a higher valuation as the fundamentals improve. So if, for example, earnings continue to increase with greater stability, the price won't just go up along the same increase, it can rise faster. The near term is still uncertain, and the most risk-averse investors might want to wait. But most investors can feel comfortable taking a position in this industry leader's stock at today's prices. Should you invest $1,000 in Carnival Corp right now? Before you buy stock in Carnival Corp, consider this. The Motley Fool Stock Advisor analyst team just identified what they believe are the 10 best stocks for investors to buy now. And Carnival Corp wasn't one of them. The 10 stocks that made the cut could produce monster returns in the coming years. Consider when Nvidia made this list on April 15, 2005. If you invested $1,000 at the time of our recommendation, you'd have $859,528. Now it's worth noting Stock Advisor's total average return is 915%, a market-crushing outperformance compared to 177% for the S&P 500. Don't miss out on the latest top 10 list. See the 10 stocks. Asterisk Stock Advisor returns as of December 2, 2024. Jennifer Seibil has no position in any